LVMH fashion division misses forecasts, Japan sales plummet, and what it means for luxury brands. Luxury giant LVMH is facing a surprising setback, and it's sending shockwaves through the fashion world. The company's fashion division, home to iconic brands like Louis Vuitton and Dior, has missed its financial forecasts, largely due to a staggering 28% sales drop in Japan. But here's where it gets even more intriguing. This isn't just about one market slump. It's a complex web of challenges that's leaving industry watchers scratching their heads. Updated at 5:30 p.m. ET on July 23rd, the news highlights a 22% plunge in LVMH's net profit for the first half of the year, with its fashion and leather goods division falling short at expectations. This comes despite Louis Vuitton's continued outperformance, while Dior lags behind, as revealed by CFO Cécile Cabanis in a recent webcast. And this is the part most people miss. The decline is almost entirely pinned on Asia, particularly Japan, where a reversal in yen weakness has hit tourist spending hard. Organic sales in Japan plummeted 28% year-on-year in the second quarter, a stark contrast to last year's boom. Cabanis noted glimmers of hope in China, but admitted the economy is probably not out of the woods yet. Operating profit for the division fell 18%, though margins remained robust at 34.7%. LVMH is walking a tightrope, capping costs while still investing heavily in its brands. Think flagship stores in Shanghai and Japan, and upcoming Dior boutiques in New York and Beverly Hills. But here's the controversial part. Are these investments enough to counter the perfect storm of weak luxury demand, a strong euro, and looming U.S. trade tariffs? LVMH's share price has already dropped 26% this year, and internal issues like data breaches and legal battles over worker exploitation at Loro Piana aren't helping. Yet Bernard Arnault remains optimistic, citing LVMH's long-term vision and resilience. The company is also banking on creative successes, like Jonathan Anderson's viral Dior men's debut, which racked up 1.1 billion social media views. But is this enough? Analysts like Luca Solca argue LVMH's pricing strategy is off-kilter, particularly at Dior, and question whether the group can regain its footing. Cabanis counters that Dior's dyes are still in demand and that Anderson's Gul Vol will ensure brand consistency. Meanwhile, Givenchy and Celine's new collections have been well received, and LVMH is gearing up for more high-profile launches. Louis Vuitton's innovative store concepts, like the Shanghai flagship shaped like a cruise ship, are also turning heads. But with U.S. tariffs looming and flat demand stateside, the question remains, can LVMH navigate this turbulent landscape without compromising its luxury status? What's your take? Is LVMH's strategy bold enough, or is it time for a radical rethink? Let us know in the comments. The decline of Louis Vuitton and Dior. What's next for luxury fashion? Louis Vuitton and Dior are no longer the must-have items. In the world of fashion, every outfit needs that one show-stopping piece. For LVMH Moet Hennessy Louis Vuitton SE, their Louis Vuitton and Dior handbags have always been the stars of the show. But here's the thing. These once coveted items are losing their shine. While there's hope that the luxury industry and LVMH are nearing the end of their slump, the fact remains that until their biggest and most profitable division starts delivering again, Bernard Arnault's empire will stay out of style. But wait, there's a twist. On Thursday, LVMH reported that their sales, excluding currency movements and mergers and acquisitions, dropped by 4% in the 3 months leading up to June 30th. This might not seem like much, but it's actually slightly better than the 4.45% decrease analysts predicted. So what's driving this surprising turn? It's not the handbags, but rather businesses like wines and spirits and selective retailing, which includes the beauty retailer Sephora. And here's where it gets controversial. Could this be a sign that the luxury fashion industry is losing its grip? With the rise of sustainable fashion and changing consumer preferences, are the days of must-have handbags coming to an end? It's a question that's sure to spark debate among fashion lovers and industry insiders alike. So what do you think? Is this the end of an era, or just a temporary setback for LVMH? Let us know in the comments below. LVMH's slump continues. Is big luxury's downturn here to stay? The recent decline in LVMH's performance highlights a troubling trend in the luxury sector that shows no signs of a swift recovery. Despite facing a barrage of negative headlines, including issues like data breaches and labor exploitation, the luxury powerhouse LVMH attempted to spin a positive narrative with its latest earnings report. While it is true that sales dipped by 4% in the second quarter, when a significant 9% drop in its key fashion and leather goods division, LVMH argued that this decline is not as dire when viewed through the lens of the current economic landscape. Additionally, profits fell by 15% in the first half of the year, yet the company has taken substantial measures to protect its profit margins by cutting costs. This includes scrutinizing budgets for fashion shows, as noted by Chief Financial Officer Cécile Cabaris during discussions with analysts. In a statement, LVMH expressed confidence, stating, LVMH demonstrated remarkable resilience and sustained its strong, innovative drive despite the challenging geopolitical and economic conditions. Luxury market analysts have found some reasons for optimism amidst the gloom. A notable takeaway from HSBC's earnings analysis was, "It's tough out there, but it won't get tougher." They suggested that the recent quarter might represent a low point for luxury stocks, including LVMH and its competitors. However, the road to recovery from this significant downturn is expected to be lengthy, with HSBC projecting that a meaningful sales rebound may not occur until 2026. In essence, the downturn in the luxury market is far from over. The surge in luxury spending during the pandemic has transitioned into a more cautious approach to consumption, particularly in the crucial Chinese market, which has heavily impacted sales across various brands. The broader economic outlook for the remainder of the year remains highly uncertain. In its latest financial results, LVMH pointed out the ongoing sales pressures in Asia, which was once a major engine of luxury growth. In the United States, the unpredictable effects of President Trump's trade war continue to pose challenges. Starting August 1st, new tariffs could impose duties as high as 30% on luxury goods made in Europe, although negotiations are underway to potentially reduce these rates. However, many of the challenges facing the industry are self-inflicted, and LVMH is not exempt from this reality. Bernstein analyst Luca Soca expressed skepticism at attributing these issues solely to macroeconomic factors, stating, "I don't accept the notion that this is merely a macro issue. The fashion industry's strategy of implementing steep price increases without corresponding innovations in product offerings has led many aspirational consumers to reconsider their purchases." It's important to note that not all luxury brands are experiencing the same level of hardship. LVMH's main competitor, Hermès, has shown remarkable resilience, emerging as a leader among brands that seem to be weathering the downturn effectively. Earlier this year, Hermès even surpassed LVMH to become the most valuable luxury company. High-end brands like Hermès and Brunello Cucinelli, which reported a 10.7% increase in sales during the first half of the year, are less reliant on aspirational buyers. They have also adopted a more measured approach to price increases, maintaining consumer trust in their value propositions. Other brands that are performing well include Miu Miu, a trendy offshoot of Prada. Next week, we can expect clearer indications of the widening gap between luxury's successful brands and those struggling, as several major players, including Kering, the owner of Gucci, Hermès, and Prada, are set to release their financial results. Analysts are bracing for a diverse range of outcomes, which could further illuminate the state of the luxury market.